And there we are. What's up, guys? Hope everyone in Prospecting Powerhouse is doing well today. I am here live for yet another Friday feature. Today we are blessed and honored to be joined by POD member and ABR Consulting Master, Adam Rundle. Guys, give Adam a big round of applause for being here. Adam, we appreciate you, man.
Thanks, Alex, and thanks for having me. I really appreciate it. And thanks to POD, and happy 1 year anniversary for yesterday.
Hey, thank you very much. It was a great time. Yesterday's 1 year anniversary was a lot of fun. Guys, if you are live with us here today, let us know in the comments below with a W. Today we'll be discussing financials for Q4, projecting kind of what you can accomplish over the next 3 months so that you can prepare and absolutely crush 2018. Now I'll tell you a little bit of a quick story about how I've worked with Adam. I was actually referred to Adam by Dave Rogenmoser, someone who's big in this digital marketing industry. Shout out to Dave. We love you, man. You're awesome. And basically, you know, when I spoke to Adam originally, we decided that we would be working together so that he can help us kind of prep our financials for this year and next as well. You know, math and numbers never really worked in this brain. And Adam's chuckling because, you know, if you've had this conversation, you know, quite a lot already over the last month and two and a half months or so. Just for some people, I think, you know, people work in two kind of different ways. You know, they have like ideas and thoughts and artistry, and then there's like solutions and financials and numbers. I kind of have a good mix of both, but the numbers just doesn't work. I've always struggled with numbers, and for years, you know, we've been kind of riding by the seat of our pants with a business that's very successful, but not really knowing numbers that are even standard, like, hey, what's your P&L for the last month? How much did you make from Prospecting on Demand, you know, in August? When, you know, when I got on with Adam the first time and he's asking me these questions and I don't have the answers to them, it's a big slap in the face and realization to, wow, I really need to get my finances in order, not just so that I can have peace of mind, which I think is probably the biggest benefit for me personally. Peace of mind is very important so that I can go to, you know, end work at 6 o'clock and not have to be thinking about business all day. But besides for peace of mind, it's also the importance of understanding the 80-20 we always talk about. Hey, what have I done in the last couple of months that's been effective? Well, if you don't have your financials in place, how are you going to know? How about what you project to make in December of 2017? A lot of people that I ask that question, they're like, I don't even know what I'm going to have for dinner tonight. How do I know what I'm going to make in December? I don't even understand that question. That doesn't even make sense. When Adam asked me that, and originally I was like, what are you even talking about? I don't even understand that. And today we're going to kind of go through a process that Adam's, you know, honestly, this is just incredible that he's willing to share this. Guys, I cannot recommend tuning in enough to this video. If you guys have something else on your computer right now, you're looking at Facebook or Instagram or something else, put it away for the next 45 minutes or so. You definitely want to tune in and listen to this very, very carefully. This is going to be a huge step in the right direction for you for the final 3 months of this year so you can really crush 2018. Do not bypass finances. Do not think that this is not important. This is critical to your business's success. And without Adam, we would not be here today where we're capable of being now and the next 3 months and the entire next year. Our growth will be exponential simply by working with him and listening to his strategies. And he's going to share that with you guys today for free. So be here or be square, guys. We appreciate you being on with us. And again, if you're live, throw a W in the comments. If you're on replay, throw an R. Other than that, Adam, the floor is yours, my friend. Kind of let us know kind of who you are, what you're doing, and what we're going to be talking about today.
Awesome. Thanks, Alex. I really appreciate it. So yeah, ABR Consulting. I'm an accountant, and the firm that I started with my two partners, Krista Steer and AZ Moya, is really focused around accounting, bookkeeping, and making sure that people can file their taxes and it doesn't kind of hurt them at the end of the day. So we're an accounting firm. We're based out in Annapolis, Maryland. And our main focus is really around service industry guys, helping them, as you've just said, to get a grasp of their business and what it looks like financially so they can plan effectively, they can really create a framework that enables them to grow, scale, and be profitable for years and years to come. And eventually maybe sell your business or just ensure that you have a really good salary and distribution from your business for the next few years. So that's kind of who we are. My personal background is really management accounting. As some of you may hear, that I have a weird accent. I'm from Cape Town originally, Cape Town, South Africa, and I was fortunate enough to work in the legal industry as an accountant for a law firm for a number of years. And my real niche is management accounting. So making sure people don't just look at their numbers as this like picture of what your business has done, but what it means to forecast going forward, budget, plan, make sure you have enough money to do all the things you want to do, to make that distribution payment to yourself at year end or at the end of the first quarter, or at the end of every month, whatever's working in your business. Krista, the other member of our team, she's really focused around bookkeeping and making sure that the systems are in place so that we can make these decisions. And then AZ Moya, who's out in Dallas, he's also a CPA, and he's really the tax guy to make sure that Uncle Sam doesn't take too much of our money. So yeah, that's a little bit of a brief about us. And yeah, thanks, Alex, for the intro and for just kind of highlighting what our mindset is around, excuse me, what our mindset is around finances in your business. So there's a couple of really good books that I would recommend any business owner to read. And whether you have a business or you're planning to have a business, I would read these 3 books, bottomline.com. The first one is it's a pretty easy read, Simple Numbers, Big Profits. Greg Crabtree, he's also a CPA, and he wrote a book around kind of the 4 key principles in your business around finances. And then there's a couple of really important numbers. I think he has 8 of them that are really good to look at. But you could probably read this book in 4 or 5 hours. If you're really new to the businessing world, you can maybe skip over the labor part of the book. Like it talks a lot about labor efficiency. You may not have that, so you can kind of skip over that and go to back to that later. But the rest of it is really, really, really important. And I would read that. The other one is the E-Myth book. I'm sure a lot of entrepreneurs have read it. Michael Gerber wrote that book a while ago, and his mentality is really kind of like the McDonald's story. He uses the McDonald's story a lot, where you've got to build a system that you can scale, a system that can go way beyond just what you're doing right now in your business. Something that you can roll out without too much effort of your time that can yield you huge results going forward. That's a really small snapshot of his book. Great book to read. The other one is A Profit First. Michael Michalowicz writes a book called Profit First. I really like the book. I think it's a bit more of a psychology book than anything else, but it's a great book around profits first. Such an important concept in any business. So those are 3 books I would recommend that you get out to read. And I'm going to just kind of give you my rundown of what those books and what it looks like to build a financial framework in your business. And what do I mean by financial framework is building a system in your business that very, very much so what Alex spoke about earlier is being able to identify how your business is doing financially. That's simple. That you just want to know. You want to know how much money you're making, how much money you're spending, and ultimately what is your profit like. People say, oh, I know I make $10,000 a month. That's how much I charge my clients. Okay, so how much are you spending? What are you spending on software? What are you spending on utilities? What are you spending on some overheads? Do you have an advertising cost? What is your salary payment? Are you planning for the tax payment in the year? Do you have a big debt bill that you need to be settling? Great questions. Oh, but I'm making $10,000 a month. That's great. Like, well, hey man, I'm making $120,000 a year. That's awesome. But can you answer those questions? And it's really important. And I don't want to take away from that $120,000 because that's amazing. That's awesome. But you've got to be able to answer those questions because at the end of the day, you've got to make sure that $120,000 is realized in cash in your pocket. Maybe not all 120,000, obviously, but a good portion of that is in cash in your pocket as an owner, not just sitting somewhere arbitrary like, hey, I made all this money, but I don't have any cash. My cash flow's gone, or I've got this big tax bill, or my credit card bill's still $50,000. I don't know what to do. I thought I was making money. Well, yes, you are, but unless you're planning effectively, unless you know these numbers, it's really a bit of a guesswork. So that's building a financial framework in your business. And that's really what we're about, is we're about helping people do that. And you don't necessarily need us, man. There's many topics out there there's many tools out there you can get. I just want you guys to take away from this call that you need to be doing this. You need to be making sure that you are running your financials in your business as often as you can. And I'll talk to you a little bit more about that. So there's a great little story. It's not a story. It's a little analogy that Greg Crabtree uses in his book, and he calls it the cow story. He says, imagine you had a cow. Now, if that cow was your business, you've got two options with it. You can milk the cow every single day, and you can have milk for the lifespan of that cow. How do you do that? Well, you got to make sure that the cow is well fed. You got to look after it. It's got to be cared for, and it's got to get the good nutrients it needs to produce that milk. Great. Second option is you can kill the cow, and you can have steak for, I don't know, 2 or 3 weeks or 2 or 3 months. I don't know how much steak a cow yields, but you can feed yourself a little while. Okay, which is great. Those are two great outcomes. That's fine. So now imagine that's your business. What are you trying to do? Are you trying to just make as much money as you can right now to survive the next quarter, the next 3 months? So to get to December and you can go on that big holiday with your family and that's it? Is that your goal? Or is your goal to milk your cow every single day forever? And I would assume that's your goal, okay? And I'm going to now stop talking to the people whose goal is to make some steak, because everything I say now is irrelevant. Just go and make your steak. But for those that want to milk your cow every single day, you've got to feed it. You've got to nurture it. You've got to make sure it's in a good environment. And it's the same thing with your business. You've got to work on your business. Now, this is a principle that Michael Gerber uses. He says, are you working in your business or are you working on your business? Okay, so you've got to work on your business. Okay, stop working in your business. You're not just someone there working day and night. You're working on your business to make your business the most perfectly healthy milking producing cow there is in the world. That's your goal. Okay, you want to get the highest quality milk you can get every single day from your cow forever. Lucky enough, your business isn't a living being, so its lifespan can be forever. Okay? So you're lucky there. We're lucky there. And I'm doing the same thing. So Alex talked about POD and what he's doing. I've got a business, man. I run a business called ABR Consulting, and I'm doing the same thing every single day that I'm trying to tell you to do. Is I'm trying to work on my business to make sure that it can pay me a salary and pay Krista and pay Azzy and pay everyone else who works for us in the future a salary forever. So that's our mindset. Business to make sure that it can pay me a salary and pay. So with that mindset with that mindset, what does that look like? Okay, so there's a couple of really important principles, and I'm only going to talk about 3 of them because I'm going to lose the one of the 4 principles that Greg Crabtree talks about, which is labor. So I'm going to ignore labor. It's a big topic. If you have a whole lot of labor in your business, then you need to invest more time into this process. It's not something I can do in 20 minutes or something like that. So I'm just going to talk about the first 3 really quickly, just to give you a bit of understanding. The first big one is owner's compensation. How much are you paying yourself? So you've got to look at this in 2 ways, okay? Your business is not a salary. Your business is a business. So if you're making $100,000 a month, $120,000 a year, that doesn't mean you have a salary of $120,000, okay? You've got to work out what is a reasonable salary that you can pay yourself from your business, that 1, you can pay the taxes you need to pay on that, and 2, your business will survive. Okay, you've got to work that out. Okay, so I'm going to get to that towards the end, but you've got to work that out. The second thing is you've got to realize in your business, what is a reasonable salary to run your business the way you're running it? Okay, and that's a very important number to have. So let's for argument's sake, say you're generating $120,000 a year, $10,000 a month, and you can take out $5,000 from that. Okay, so you can earn yourself $60,000 a year. Great. Okay, perfect. Let's go. But if realistically, if you left your business and you had to pay someone else to come and do your job, and you had to pay them $80,000 a year, you need to know what that number is, because that number determines the health of your business. That number will determine, and if you can't afford to pay $80,000 a year to fulfill that role, what does that mean? That means your cow isn't as healthy as you want it to be. That means it's not producing the milk it's producing, because it cannot sustain a level outside of yourself, which is fine for a long period of time. And I'm not saying, hey, stop your business. No, that's fine for the first couple of years, because that's the whole point of starting a business. But you need to know what that number is, because you don't want to be that guy earning $60,000 for the next 10 years in your business when you should be earning 120, 150, 200. Because if that's what it's worth, that's what you need to be earning, which means that's what you need to be forecasting now that you can plan effectively and make it happen. Owner's compensation is a big thing. We need to start thinking about that and start making sure that you understand what that means in your business. Second big principle is profitability. So what is profitability? Okay, so profitability is how much money you generate as a profit, okay, from your business. So all the income that you're making, less all the expenses that you're incurring, you're left with a profit. Now, I want to just talk about pre-tax profit. So when I say pre-tax profit, before we pay Uncle Sam his money, let's talk about that number, okay? So we're focusing on pre-tax profit. And we want to look at profitability as a percentage. And that percentage we measure as a percentage of revenue. Revenue, income, same thing. Okay, let's just not get bogged down on the terms here. All the income you're generating. So in this business we're talking about, we're generating $10,000. What is our profitability? Now let's assume you take your $5,000 and let's assume, I don't know, let's say another $3,000 for, I don't know, overhead expenditure, advertising and whatnot. Okay, I'll show you a little bit of an example. We will run through the numbers in a little bit more detail. But you're then generating $2,000 a month of profit. 2,000 of 10, 20%. Your profitability is 20%. It's a very, very, very important number to know, because that number is representing whether your business is a viable business going forward. Can you continue to generate enough profit that the milk is good enough that it can feed your family, feed your business, and keep getting better? Or is it just coming out in drips and drags that maybe I can have milk for this month, but might not have next month? I don't know. Maybe end of December. I don't know. So that number is really important. And Greg Crabtree talks about 10%. Now, I agree with 10% if you're a kind of an inventory-based business. So if you're selling a good, if you're selling, let's say you make T-shirts and you sell your T-shirts, maybe 10% is fine there, because your cost of goods is pretty high because you've got to buy a whole lot of raw material. A lot of the people most people that I would assume that are probably listening to this are service-based people in the service industry. So I'm going to talk to you about service-based people a little bit more than I am going to talk about inventory. So let's say you're offering, marketing services or whatever that may be. Your profit number needs to be 15% or more. Okay. And I'm going to show you an example why that is so important in a little bit, but it needs to be 15% or more. So you need to be aiming. That $2,000 example I just had is great. Perfect. Remember, it's pre-tax. You're going to pay Uncle Sam on that. Okay, so Uncle Sam's going to take his a little bit. So there's going to be less of that left. Okay, so imagine there's a 40% tax rate. So you're only going to be taking out $1,600 after that. Okay, so that is a big portion. Okay, so it's really, and my math was wrong there. You're going to take out $1,200 after that. So it's really important that you make sure that you continually strive to have a profit percentage of about 15%. The third thing, the third principle, and I'll go into them in more detail, is cash flow, the dreaded cash flow. Do we have enough money in your business to, one, keep the business surviving, to pay your salaries, to have those tax bill at the end of the year? Do we have enough money? Yes or no? And how are we planning for that? Okay. Cash flow is really broken up into four main sources. The one is tax. Everyone's going to pay Uncle Sam at some point. Do you have enough money to pay Uncle Sam? Do you have a whole ton of debt that you've wound up? Okay. You started this business. You maybe went on a whole lot of courses. You maybe invested in all the stuff that you wanted to do, and you've racked up $10,000, $15,000 of debt. You need to have the cash flow to start servicing that debt. Maybe not all in one go, but you need to have a plan to get rid of that debt. You can't just let it sit there. It doesn't work that way. So we've got to have a plan to sort out our debt. And the next one is working capital or core capital. There's a couple of different phrases to it. This is a really important topic about the long-term longevity of your business, is building up core capital or working capital so that you can survive long-term. So building up some reserves. Okay. 200% is a good number on this. 200%. What? 200% on 1 month's expenses in your business. Okay. 200% just 2 times. So in our business, we said our monthly expenses are $8,000. Okay. So we want to have a cash reserve of $16,000. Okay, that's what we want, 2 times that. We want to make sure that we have cash reserves. Now, again, it might not happen the first year, second year, third year, but we've got to have that number down. So we're starting to plan to get to that number. And then the fourth thing in your cash flow is the distributions. What are distributions? Distributions are payments to yourself. Payments that you're going to make to the business as the business owner of this business. Now you can understand, I put that at 4, and it's not me. Greg Crabtree puts that at 4. I can tell you now you wanted that to be number one. And you're probably treating it as number one right now in your business because you're going, hey, man, I've made $2,000 this month. That's great. So let me take out another $1,500. And the next month you make another $2,000 and you take out another $1,000. And the next one, and you're taking out all this money and you're probably buying yourself some nice toys. You're going on this lovely holiday. And hey, man, you may have deserved it because you worked hard. But what happens at the end of the year when you have a tax bill? What happens at the end of the year when you have this debt level to service? Are you building a core capital in your business so that you can make sure that you can continue to run your business? Oh, no, I didn't do that. Oh, well, I don't have any more cash because I spent it all. Your cow is not looking healthy right now. You're not going to be able to milk it in 2018 the way you want to. And that's so important, guys. We want to end 2017 strong and we want to get 2018 to a flying start. We want to make 2018 the best year we've ever had. We all do. I do. I know Alex does. I know every single one of you want to, but we've got to plan effectively for that. We can't go on our $2,000 holiday or whatever it is at the end of the year if we can't afford to. How do we know that? We've got to measure it. We've got to understand. We've got to have a system in our business. Okay, so that's kind of what I want to talk to you a little bit about going forward. And the rest is really, so that's kind of Greg Crabtree and his little principles. Michael Gerber in eMyth, he talks about a system. Our system is the system of putting this into numbers, getting your QuickBooks up to date, getting some reporting tools out there. There's a whole lot of them. We've got some free ones that you can use. I'll talk about later. You can go on, you can start using, implement the system. Get it there so you can say, hey, what is my profit figure? Oh, it's 10%. Hey, that's a problem. I've got to get it up to 15. What can I do? I can save money on marketing. Okay, let me save money on marketing. Next month, get up to 15%. Hey, man, you're starting to run a business. But if you're not doing that, you don't have a system, you can't measure these numbers. There's only 3 of them I've spoken to you about. Okay, they're pretty easy. But if you don't have a system, you can't measure the 3. Uncle Sam's going to come knocking in March next year. You're not going to have the money to pay him. All of a sudden, your cow's going to start drying up. We don't want to be in that position. And then the last guy I was talking about was Profit First. And I would just recommend you read that book from a mindset point of view. Read it. It's great from a mindset, great to get your mind around it. I don't necessarily advocate all of his principles in there about making different bank accounts and stuff like that. There's nothing wrong with it. But I think if you get the first 2 points that I spoke about right, you don't need to do that. It's the same concept, but it's a great mindset.
Adam, quick question for you, and I think this kind of speaks to a lot of people. When you get started in the business, right, and you're talking about these books and you're talking about all these numbers and projections, coming from your scenario, right, you're confident in it because you already know so much. When someone's getting started and someone's just kind of molding themselves into the either business thought process or the financial aspect of their business, what would you say is the first step for them to take? Is it to read one of these 3 books? Is it to hire someone like yourself to do consulting with first to kind of get the baseline of where they need? Is it, do some research on what your ownership is? Is it to kind of build a vision board to understand what your profits are? Where do you get started? Because I think a lot of people financially, and I'm speaking from experience here, it's kind of like random. I'll tell you guys a quick little story, and I think this will resonate with a lot of people. I left college, and I was working in the journalism field for a little bit. I didn't know what was a good salary, right? Good salary. It's all, it depends on who you are and where you're at in your life in terms of good salary, right? But it's subjective. But at the end of the day, I would literally just call my dad and ask him, hey, is this a good salary? Is this something that I should be trying to hit? And I felt that I was kind of missing the mark a lot of the times. And I honestly feel like I was missing the mark for many years until I met Joseph Hartman and yourself and some of the people that have really helped me kind of understand the financial backing. So if someone's relatively new to the entrepreneurial world and just trying to get, set with their finances, what would you say is first, reading one of these books or hiring someone to kind of help them with understanding what they need to do next?
I think that's a really good question. I think I would definitely start with reading the books because you don't need to read the book and do no action. So you can have a whole lot of action things while you're reading the book. Okay, so I would read the books regardless. I would get them. You could probably read them in a week. You could read all 3 of them. Okay, I would read them just to start wrapping your head around some of the principles. Then the biggest thing is you're going to go. So you're starting a business. I'm gonna say this, and some people may kill me, but I'm just gonna say this: just start an LLC. Okay, it's so much easier to start with an LLC. If you need to change eventually, and if you're making enough money to warrant an S corp, then you've got enough money to go and pay for a consultant to sit down and have that meeting with you and do it. So let's jump ahead of that. Okay, so start your LLC. and register it and open a bank account. Once you've done those two things, you're already probably 50% further than a lot of people. Okay, so you do those two things, and then you open up a QuickBooks account or a Xero account, whatever you want to use. I don't mind. We are QuickBooks people, but you open one of them. And there's a bunch of tutorials on how to use them there. And what you do is you just start the process of measuring what is happening in your business. It's that simple. It's a bank feed into a QuickBooks account. There's a bunch of transactions, and you're just going to allocate them to a different line item that you're going to create in your QuickBooks account. If that is a little bit too much for you to do, you can go onto cfocoach.com, which is who we are, where you can go on there. There's some free tools. There's a lot of them out there. So go on there. There's a budgeting tool. There's a sales tool. There's a tax planning tool. You can go on there. There's a cash flow tool. Go on there and just start recording it. And when I share my screen, and I'll show you what I mean by that. But you just got to start putting pen to paper. Start saying, okay, income. How much money am I going to make or hope to make? How much money am I going to spend? I need my ClickFunnels account. I need to have this software. I need to have that software. I need to pay for this advertising. I need this freelancer. I need this, or whatever it is. You write it down. Don't write it on a piece of paper. You can, but we're in the technological world. Get it onto Google Sheets. Get it onto QuickBooks. Get it onto something that it's there. That doesn't have, you don't have to write it out every week and think, oh, what was it last week? No, rubbish. Get it onto QuickBooks. Get it onto a Google Sheet and start the process. And you will start seeing if you're making money or not.
It's huge. And guys, to Adam's point, I'll kind of reference my beginning of my story. When I started Sky Social Media, which was the beginning of Prospecting on Demand, when I started that, I was lucky enough to have two entrepreneur parents. So both of them went through their processes of starting up a business and going through that process. If I hadn't, when I originally started, I had no LLC. I was just getting paid directly, which is a big no-no. And that's why Adam's saying, look, just at least start with the LLC, even if you have to change to an S Corp or Schedule C or things that I'm going to start saying and vomit out of my mouth from all this garbage that I'm speaking that I don't know what I'm saying reality. That's why I brought Adam on here. But the reality of it is, my mom, the first thing she told me, she ran her own art studio in Aventura, Florida for 10 years. First thing she did, set up an LLC, make sure that she's got it covered. First thing she did for me when I was getting started in this business is, we're incorporating you here in the state of Florida, LLC. Now, we ended up changing it later down the line to benefit us, but changing it later down the line is smarter than not having it in the first place, just like Adam's saying. So if you're serious about being an entrepreneur and owning a business and not wanting to be a wantrepreneur, just getting paid for consultancy and freelancing, that's how you get started. You got to incorporate. You have to do an LLC. You got to start somewhere, and that's really the best start. So appreciate you kind of laying out the land for someone beginning. Are we going to be moving in here now to a shared screen with some information?
Yeah, let's do it.
Beautiful. All right, so Adam is about to share his screen here. Guys, what you're about to see is infinitely more valuable than anything you've seen so far in terms of finances. This literally blew me away the first time I saw it. I'm very excited to be able to bring this to you guys. Adam and his team are very confident in what they offer, but I don't think he even understood how valuable it was until someone like myself came in and kind of expressed all the pain points that we had. And when you see them and kind of understand the opportunity of what this document will provide for you, it's pretty unbelievable. So without further ado, Adam, feel free to kind of pull back the curtain. Let's share your screen and let's get this going.
Thanks, Alex.
No problem. And Peo and Grace and Danny, anyone that's asking questions, we'll make sure to come back at the end of this to answer any of them, to make sure to do it. But Grace, in terms of what state to establish your LLC, do that in the state you're working in.
I agree.
All right, guys, you should be able to see the shared screen now, which I can confirm here. And there we are. Awesome.
Okay, so this is the kind of, this is a little bit more insight. Then I'm going to jump over to another screen to help you kind of, those little principles I spoke about, help you start to implement them right now. This is a little bit more. This is the sheet that we actually use with our clients. This is the real behind the curtain. It's our test client. So I'm not revealing any nasty secrets or anything. So it's a tool that is really based around managing your business from a cash flow perspective more than anything else, and making sure that all those little principles that I spoke to you about, they're happening in your business. And this could be overwhelming for you, those of you that are looking, but it is really just, it's taking your information and putting it into a way that you can really understand from a cash flow perspective, and secondly, how you're going to project in your business to make sure that that profit figure is right, your reasonable compensation, and your cash flow is solid enough for you to survive. You can keep milking your cow. I'm not going to say it enough. Keep milking your cow. Okay, so this is just a brief little view of what that looks like. I'm not going to go into too much detail on it, but we have this lovely thing called this key numbers tab, and it'll tell you the main numbers. I told you cash flow, there's your profit, what your income, your expenses are, what your tax liability is, your distributions. It gives you a little show into, hey, what's happening in my business? What do I need to start looking at? What is the red? What is red? What is green? What is blue? What's happening? And then there's a whole lot of different little tabs that you can go into looking at your P&Ls. And Alex said, hey, Alex, what was your P&L? Alex wasn't sure. And here it is right here. You can see your P&L. And why is the P&L so important? Guys, a P&L is a profit and loss statement. Takes all your income, subtracts all your expenses, and gives you that wonderful profit line. So yes, I can go 10,000 minus 8,000 and get you 2,000, but I also want to know what that 8,000 is made up of. I want to know what that 10,000 is made up of so that I can actually plan in my business to make sure that survives. So this is just a little sneak behind the scenes look at what we do through QuickBooks for our clients. But I want to jump over to what we call the owner's distribution. It's an owner's distribution management tool. And I want to just paint you a picture for your business quickly. And I want to highlight something that I know is going to probably annoy you, because you're going to be like, man, I wanted to make more money than that. But I want you to understand how important this is for the longevity of your business. So I'm going to look at 2017. So you guys can see I've got this 2017 budget and forecast. And all I'm saying is, let's assume that I'm not worried about what's actually happened. I'm just going to say this is what we plan to happen. And let's just assume it actually happened in 100% reality. And I say to you, our business is we have a consulting business and we generate $10,000 a month. There it is. Okay, $10,000 a month for January through December. We make $120,000 in income at the end of the year. That's our revenue line. Great. Perfect. Told you have a couple of expenses. We have $1,000 a month we're spending on advertising. We're spending $500 on rent, $500 on salary, on software. That's $2,000 a month that we're spending on overhead expenditure. That's built out through the year. $24,000 at the end of the year. We're spending that. You'll see I've left owner's salary out for now. Okay, this is the important one, first flag. Okay, right now our profit margin is 80%. It's obviously very high because we haven't factored in owner's compensation yet. Okay, so it's 80%, which is great. So in this business, what you're probably thinking to yourself, hey, I can pay myself $8,000 a month. Check it out. I can pay myself $96,000 for the year because I've made that money. Okay, so let's assume you want to do that. Okay, so let's put in here that $8,000 a month is how much you want to pay yourself. Okay, there it is. End of the day, your business made no money. I can't want to say made no money because that's wrong. It made a whole lot of money, but it doesn't have any money at the end of the year. It's not showing any profit because you've taken all that money out and you paid yourself a salary. So you earned yourself $96,000, which is great. I'm going to highlight this in red here. There it is. Okay, there's that $96,000. You earned that money. Great, man. Yes, I left my 9 to 5. This is the best decision I ever made. I was earning 60. I'm earning $96,000 a year. This is amazing. I'm the best businessman in the world. And you're probably right in a way because you've done very well. That's great. But there could be a bit of a problem. And so what is the problem? Is you took the distribution at number 1. You didn't take distribution at number 4. Remember, there was 3 things above distributions. There was tax, there was debt, there was working capital, and then there was distribution. So I'm going to show you what this does to your business. And it'll scare you in a small way, but it will hopefully help you realize that this is so important. Okay, so I'm going to scroll down here. So, tax planning. You earn $96,000. Okay, I'm going to assume that you didn't pay any withholding tax on that. Okay, you just took out the $8,000 every month and you rented a nice house on the beach and you traveled with your family all over the place and you had a lot of fun and you spent your $96,000 like anyone would when they got it, and that's fine. And you didn't pay anything to the IRS. Assuming these tax rates, 27 and 8.25, they are not solid tax rates. I'm just using a little figure here, so don't quote me on those. You owe the IRS $33,800. Okay, there it is right there. Okay, I'm highlighting it. Those of you that can see it, I'll make that in one in red as well. That's how much you owe the IRS. How are you going to pay it? Well, you used all the money. Okay. So I'm assuming your business started with a little bit of money. Okay. And so I just said your business had a $100,000 like buffer to it, but it paid itself out, all that $96,000 to yourself. So you've only got $4,000 sitting in your bank account at the end of the year. You got a credit card that you've whacked up to pay for some of those advertising expenses and to make sure that you survive. So that's negative $10,000. So you don't have any money to pay Uncle Sam because you took out all the money and you paid it for yourself. And guys, you may think this is extreme, but I can tell you now the vast majority of our clients are in this exact picture. Maybe not the numbers.
I have made this mistake personally. I have told Adam this.
So it's crazy. Okay. So what you want to do is, so I'm going to show you the picture. So at the bottom here, this is year-end distributions. Okay. Remember we spoke about the factors of cash flow for year-end distributions. The first one is tax. You need to settle 100% of your tax bill. You owe Uncle Sam $33,000, $800. You owe him the check. You got to write it out. Okay. You have a debt level of $10,000 that you need to settle at some point. Do you want your cow to produce milk next year? Okay. You've got to start building working capital in your business. Okay. What is that working capital? It's 200% of your monthly expenses. So I'm going to scroll up quickly. What is your monthly expenses? Your average monthly expenses is $10,000. Okay. There it is. $10,000, $10,000, $10,000, $10,000. So your average monthly expense is $10,000. So you want to have $20,000 working capital surplus in your business to survive, to keep going. Okay. So if you plan that, you would be negative $63,800 in the red. You won't have the money to do that. Okay, that's scary. Now, it's extreme. I get that.
It's not even that extreme, though, I think, because I'm pretty certain a lot of people don't realize this, that they owe, taxes and they don't pay it appropriately. Yep. When Shira and I, right before we were going to go on our honeymoon, we didn't pay taxes the entire year. We thought it was not going to be a huge bill. We owed a massive bill at the end of the year, that we were not prepared for, and we paid for that for almost a year after. I hope you learn from my mistake and also learn from Adam expressing this fake scenario mistake so you don't make this mistake. That's why we're on here today, so you don't make this error. It's too risky to do that. Make sure you're prepared.
Yeah, it's the reality for a lot of people, and it's sad because right now, what happens here? This is something that I believe is like a crime against humanity right now, because what it means in this business is that your business is going to go out of business, and you know why your business is going to go out of business? Because it owes the IRS money. Like, just think about, in a way, how counterintuitive that is. The whole point of the IRS is to pay you pay taxes based on how much money you earn. So if you owe the IRS money, it means you've made money. Now I'm telling you, hey, you made money, but you're going to actually have to close your business down because you can't pay the IRS. Just think about, like, a little bit of counterintuitive. Like, the whole point of paying the IRS is because you made money. And now I'm telling you, you can't pay the IRS because you don't have money. But hey, I made money. Yes, you made money, but you just planned very poorly. You didn't have a financial structure in your business to look at the picture and realize, what is my owner's compensation? What can I pay myself that can keep Uncle Sam happy, that can keep my cow happy, more important than Uncle Sam? Who cares about Uncle Sam? But let's keep my cow happy so that I can pay myself the same salary and even more, hopefully, next year and the year after year after year after year after. So how do we rectify this problem that we've created? Well, the first thing we've got to do is we've got to use the sheet. Okay, it doesn't have to be this sheet. It can be however one you want to use it, but you've got to start putting it into numbers. That's why I said to you, the first thing is just put them into numbers, put what's happening into numbers so that you can plan to know how much money you can or cannot spend, how much money you can or cannot take out as a distribution. So I want to take this salary out. Okay, and I want you to look at your business without your salary. Okay, and I want you to work out now how much you can take out as a salary. And I'm going to scroll down because it's all in here. Lovely, the math is done for you. Okay. You got to understand that because it's an LLC, I'm talking about LLCs. If you're an S Corp, it gets a little bit different. So if you're an S Corp, guys, and if you're making enough money, you need to pay someone to give you the consulting you need. I'm sorry, I don't have a magic wand that I can wave and say, this is what you got to do. It's not expensive. You go find a consultant, we're them. If you want to use us, that's fine. But go and speak to someone about your tax planning and take that little bit of money, invest in it, because it's going to help you in the long term. Okay, so
Adam is being modest, and I won't allow him to be modest. Don't go anywhere else. Work with Adam. There's a reason I brought him on here. That's the reason, is to share value with you guys and to understand that this is the right person and team to help you guys achieve the goals that you're looking for. Don't make these mistakes. Do not run your business into the ground because you're milking the cow and trying to cut it up at the same time. Make sure you really do have a right structure. It's very important. Can't eat the steak and milk the cow at the same time while also trying to run off with your wife on a honeymoon. Doesn't work. Doesn't work.
Thanks, Alex. I appreciate that. Yeah, you guys can give us a call and we will obviously love to help you. That's the whole point. But just I want to get back to this thing of like, okay, so let's reverse engineer. It's such a lovely word to reverse engineer. It sounds like you're really clever. But effectively, let's just look at it from a different perspective. Let's look at it at the end of the year to forecast for what we should be doing in the year. So I'm going to take out our salary. Okay, so I'm going to say to me, Adam Rundle, I'm taking out my salary. In my business, I'm generating this $8,000 profit every single month. I'm all excited. So I put it into the numbers, okay? And so here it is at the bottom. I say I made $96,000 at the end of the year, $8,000 every single month for 12 months. My profit in my business was $96,000. Because I'm an S Corp, I get taxed on that, whether I took it as a salary or I took it as a profit in the business, I get taxed on it in the same way. So I still owe the IRS, I still owe Uncle Sam that $33,000. I can't get away from that. Okay, there it is, highlighted here. I'm going to highlight them as I go. At the bottom here, there's that $33,800. I have a credit card bill. This is just an arbitrary thing, but I have a credit card bill of $10,000 planned for it. There it is, $10,000, okay, in there. And I want to build core capital in my business, okay? Now you can see this core capital in my business or working capital is only down to $4,000 because I've taken out my salary, okay? And I don't mind if you plan on this number for now because I'm going to show you what it does, okay? Let's just keep the 4,000 for now. So I'm going to highlight that one. It is telling me to be distributed, okay, $48,000. That is how much money you can take out of your business. To one, ensure that you can pay Uncle Sam. You don't run into cash flow problems. To settle the debt you need to settle. And three, to make sure you're building core capital. Why do you need core capital? Why do you need that working capital? So that next year you can milk a cow. Okay, don't let me underestimate that one. Okay, so now it's telling me $48,000. That's, man, Adam, you told me 96 a few minutes ago. Like, man, I own $96,000. Now you're telling me 48. Yes, I'm telling you 48 so that you don't have a negative 63 bill sitting over your head and you can't pay the IRS. Okay. So yes, you may say, okay, that's a little bit low. Fine, that may be low. Now I'm gonna be fair with you. I'm gonna be like, okay, we can do this, man. Don't worry, we can do this. If you have enough cash, let's say 60. Let's say, hey man, I can get to 60. Maybe towards the end of the year, I can get that 120 up to 140. But let me say 60. Okay, let's say 60. So I put 60 in. What is 60? 60 is $5,000 a month. Okay, so I put my 60 in. There's that $5,000 a month to $60,000. And all of a sudden, I'm getting to the end of the year, and this doesn't look so bad anymore. It's only negative 21. I'm starting saying, okay, that's not too bad. Why did I say that's not too bad? Well, maybe I don't need to settle that full credit card debt. Maybe I just need to settle 50% of it. Okay, that's a good thing to plan. I only need to settle 50% of it. Okay, and maybe I don't need to have working capital of a full 200%. I'm comfortable to have a working capital of, let's just say 100%. Okay, and all of a sudden we're down to 10. We're already in a much better place. Just because I went and I said, I'm going to set a salary from day one. Okay, it's still not working for us though. We've got to be a little bit better around that. Okay, so I'm going to say, let's set a salary of $4,500 a month. Okay, set a salary of $4,500, $54,000. Hey, look where we're looking at now. Hey man, we're starting to look a whole lot better. Hey, like, yes, we're a little bit over. We haven't quite settled our credit card debt. We've kept Uncle Sam happy. We maybe haven't built the working capital we wanted to build in our business. Hey, it's only year one. Okay, next year we can add to that, and the year after we can add to that. I've factoring in your cash flow. I can afford to pay that. Hey man, this is looking a whole lot better. Okay, but guess what? I had to limit my salary to X amount. I had to. I had no option. I couldn't say, hey, man, I earned $8,000 a month. I earned $96,000 a year. I couldn't do it. I had to cap it somewhere. That is number one. First and foremost, get your owner's salary right. How do you work out your owner's salaries? Build the model, build the plan, put it out there, run the numbers, start figuring out what is affordable in your business.
Guys, I want to break down something here for you guys. I think this is super important. Adam, first of all, started by expressing what you do at the beginning of your business. Here's kind of the common problems I see. Here's how you kind of get started, read some of these books, kind of understand the mindset behind it. Now let me show you these tools, right? Here's what it looks like if you're doing something great. But then at the end of the year, you realize I messed up because I owe a lot of money for taxing. Why do you owe so much money? Well, you probably haven't set up your business in the effective way you need to. Well, Adam's not just going to come here and provide you with problems. Now he's showing you how to solve these problems. Again, whether or not you decide to work with someone like Adam or an accountant at all, the point is, regardless, you must have a plan set out for the final 3 months of this year so that 2018 will be actually set out for you. So you know what you're going to get paid. So you understand what your projections are for budgeting, expenses, income, etc. This is a full opportunity for you to have clarity of your financials for your business. Where do you have clarity in your life in general? Very few places. A lot of people have muddied views of most everything in their life. The opportunity here, one thing that's so important and one place you must have clarity is finances. Don't allow finances to be the part of your business that's muddy. If you're muddy on what you're offering, you're muddy on your sales, you're muddy on your consulting, okay, all those things can be matured and massaged and made better without making huge errors or huge missteps in your business. Finances, though, you can massage the numbers as best as you want, but if you owe taxes to Uncle Sam, there's not much you can do other than paying it and putting yourself on a payment plan with awful percentage increase in interest. Don't let that happen. Please, if you're an entrepreneur and serious about this business, make sure you have clarity for your finances. That's why we're here today, so you can expressly understand how important it is to do that.
I can't agree more, Alex. I cannot agree more. The last thing I want to say to you is, if you start using something like this and you start building this out, okay, and you start planning effectively for what's going to happen in your business. So let's just say you're going to start doing this now. You obviously want to start doing this now, and you want to maybe look at 2018. Things are going to change, obviously, okay? So because I built out this model, I've realized that the maximum salary I can pay myself right now, okay, let's assume this was 2018, January 2018. The maximum salary I can pay myself right now is $54,000 a month. Okay, that will make sure. And remember, the nice thing about this model, just so that you guys understand this, that's $54,000 in your back pocket, because the salary, the taxes you pay over and above that are already factored in below. That is why it's only $54,000. It's actually $54,000 plus the $33,000 that you owe Uncle Sam in taxes. So your gross earnings are actually a lot higher. Okay, so you're probably already earning better than what your 9-to-5 was. I just want to put that out there. So we plan that. As the year goes, things happen. Of course, things happen. Maybe February's different. Maybe February's $12,000. Great. Maybe I spent a little bit more over here. Okay, or maybe not so much. Maybe I spent a little bit more over there. Maybe all of a sudden I start averaging $15,000 a month for the rest of the year. Okay, and I start averaging that out, and I start going, and I put that in, and I'm recording them in my system. Look down. Oh my gosh. End of the year comes, I can distribute more money. I've earned more money. I can distribute it. But guess what? I've kept Uncle Sam happy. There it is. I've kept him happy, making sure I'm keeping my debt levels at a reasonable level. I'm building core capital in my business so I can keep milking my cow. And now I'm starting to realize that profit number over there. And when am I taking out that distribution? Towards the end of the year, when these things are happening. Because what didn't I do? I didn't put the $8,000 in Word Go. Boom, put it in right there. And all of a sudden at the end of the year, I was in trouble. I put it at a reasonable level, like compensation, right? Make sure I was measuring my taxes. Make sure I was measuring what my core capital needs to be. I got it all right, measured my cash flow, and I was surviving. And if I do well, I just pay myself more. That's fine. But not just, hey, I did well this month, therefore I can pay myself more this month. No, you look at your plan, you see what's affordable, and you pay yourself what's affordable. And guys, I don't want this to feel like, oh, I'm being limited in my business. No, this is to make sure that you get that salary every single month of every single year for the rest of your life. Don't underestimate it, guys. I just cannot express it enough. Yes, I know you don't want to. And yes, okay, people say, how much time can I do on this? Guys, this can take you half an hour once a week. It can. Maybe it'll take you 3 hours the first time you do it, because you've got to set it up, and you've got to get everything right, and you've got to put your rejections out, get it all nice and neatly, put out your way one. And then every week, you just go back. Keep reviewing. Am I on the right number? Hey, man, I didn't make enough money next month. Maybe I need to lower my salary. Otherwise, I'm going to be running into problems at the end of the year. Measure the number. Measure it. Make sure you know so that you can grow your business to a profit-making machine forever. That's what we want. But don't let some stupid things in the beginning, like, hey, man, I made $8,000. I'm going to go on a holiday in the first month of my thing. Don't let that cripple you, guys. It's so unfair. It's counterintuitive. I told you, it's so counterintuitive when you close your business because your Uncle Sam money. It's counterintuitive. Don't let it happen.
I think one of the weird things, Adam, also is like a lot of people might watch something like this or read a book and feel like this is optional, right? You're like, hey, it only takes you 30 minutes. I don't care if it took you 5 hours. This is a necessity for your business. It's not optional. It's not optional. You can't have your financial projections and understanding your structure of your finances in your business as something that's going to be like, I'll deal with it later. You can't do that. And I'm telling you guys this from experience. It took me a long time to be able to really structure our finances appropriately. And the second that we did, skyrocketed. And I don't just mean finances skyrocketed. It doesn't just mean we got more revenue. It means I had more peace of mind. I can go to sleep better at night. I'm not worried about answering a question like I have no idea how much money I made in profit in July of 2016. I know because I can see it, because we have the right information and structure behind it. I know that I don't have to worry about taxes at the end of the year. And when April comes around and everyone's freaking out, I've got it handled. I've got it locked in. I know that I can pay my employees appropriately. I know that I can take out a bonus at the end of the year when I deserve it. This is a critical and important aspect of your business. It is not optional. Do not believe in any scenario that this is optional. The only way that this is optional is if you're not serious about being an entrepreneur. If you want to be a freelancer and a consultant and kind of just do some work on the side while you have a 9 to 5, all right, you don't have to do this. Probably still will benefit you to do it, but you don't have to in that case. But if you're serious about being a business owner, about having a real business that you could potentially sell or take yourself out of at some point, this is required. You can't go to an investors meeting without something like this. Be like, okay, well, what's your numbers? Well, I think I make like $5,000 a month. How does that sound to you? Well, do you have numbers on it? Do you know how many expenses are? What's your profit and loss? How's the breakdown? What's your projections? I don't know these things. If you don't know these things, you're missing out on opportunity for yourself. It's not only important for the beginning of your business, for the intermediate, for the long term, as a whole. This is required for you to be successful in the long run with this business. And that's why we had Adam come on here today to do that. I want to make sure that we answer any questions. Before we do that, Adam, is there anything you want to close off here with before we stop sharing this screen?
That's all, guys. I think, Alex, you again hit the nail on the head. The only thing I was thinking there when you said is a lot of you've probably watched Shark Tank before. And if you watch Shark Tank or whatever those investment programs are where guys go and pitch their ideas, some of the biggest reasons why those guys turn them down is because they don't know their numbers. And guys, you've got to understand when you're in that game, it's all about the numbers. It's all about your profit margin, how much money you're making. Do you have cash flow surplus to run your business? It's not optional. You've got to do it. There's tools out there that you can do them. Do not treat it as optional.
Beautiful. All right, guys, let's go through some of these questions here. Make sure that we got you guys all covered. If you have any questions, feel free to ask them now. Now is the time. Adam, you can stop sharing your screen so that everyone can see our full pretty faces. And let's go see here some of these questions. I know Peo had some and Danny had some. So let's do that. First of all, in terms of the 3 books you recommended, is there one that you recommend reading first? Simple Numbers, E-Myth, or Profit First?
I would go in that exact order. I would go
That's hilarious.
E-Myth and then Profit First. My advice to people and just don't get hung up. Don't get too hung up on Profit First and what Mike wants you to do in Profit First. I'm not saying he's wrong at all, But you will see, if you've read the other two first, you will see why I'm saying what I'm saying. Because you don't necessarily need to open a whole different series of bank accounts and stuff like that if you follow the principles of the first two books first.
Beautiful. Okay, the other question was from Peo. She asked about the salary. What salary do you put in if you can't afford to pay yourself what you're worth yet? And when do you know when to increase your salary?
Okay, so that's a great question. So what I would do if you're in a business that you can't actually afford to pay yourself a salary, there's two things I would do. Is I would make another version of this plan that you're going to make, and I would just call it like no salary project or salary projection. And I want you to put in there what you believe your salary is worth. So if you believe it's worth $70,000, I want you to put, or 80,000, I want you to put it in there. And it's obviously going to be a very negative number at the bottom. You're going to have all this negative. But that's important because when you start putting actuals in, you will start seeing the real growth of your business. Because without a salary, your numbers are very skewed. And if you read Profit for Simple Numbers, he talks about that smack bang. Chapter 1 is like, do not let your numbers lie to you. Okay, but that's a planning tool. The realistic tool is when can you start paying yourself profit. So what you got to start doing, you got to plan out as much as you can, collect as much real information as you can, and you've got to start seeing when that profit margin is starting to tick over. If you've got no salary, it's got to tick over well over 50%. Okay, if it's still sitting at like 30%. Okay, that profit percentage margin, if it's still sitting at 30%, you're going to struggle to pay yourself a salary because any salary is going to bump that right back down to negative. So let that number get as close to 50% and then start putting in a number that makes sure that number doesn't get lower than 15 to 10%. And that's what you can start paying yourself. Not immediately, maybe give yourself a lag time of 1 month, make it actually happen for a month. And then next month, you can maybe start paying yourself a salary. And there's no exact science to it, but don't just make sure you've got it recorded somewhere that profit percentage is not going below 15%. Okay. So if you're at 30%, it's probably worthwhile for you not to put any number in because the number is going to be too small for it to yield any real return. Rather let that be in your business to create some cash flow surplus so that when you start paying yourself, you've got a buffer.
A couple people asked about the sheet being for sale and working with you guys. If you want to work with Adam and ABR Consulting, please do feel free to reach out to him on Facebook. And Adam, you can also put in your email below, but you'll be able to see the comments after from Danny and Grace and a couple other people. But yeah, Adam's a great person to work with. His team is fantastic. I have firsthand experience. I can't recommend it enough. The other question that someone asked was establishing the LLC. Do you establish it in the state you live or the state that you're working in most?
It doesn't really matter. That big one is probably around which state has lower state taxes. So if you're in this conundrum of where you live and where you're doing most of the work, choose the state that's got the lowest state income tax.
Also move to Florida with none.
Precisely. You can do that.
Looking here if there's any other questions, guys. If you have any more, feel free to ask. I'm looking right now. Another one from Peo here. Do the taxes come from core capital or profit? Same question for the 2 times monthly expenses.
Okay, so do the taxes come from core capital or profit? So taxes are yielded on profit. Okay, so a simple little tax lesson is if you make no money, you don't pay taxes. It's pretty that simple. Okay, so you're paying taxes off the profit you are generating. Okay, so if you generate, remember, if it's an LLC, it's a flow-through entity. So if you're generating $96,000, whether you're paying yourself $8,000 a month in salary, so it leaves your business bank account, goes into your personal bank account, and you spend it, or it's sitting in your business bank account, it's still $96,000, which means you owe taxes on that $96,000. Okay, so that's what you're going to calculate it on that profit figure. The number I was showing you that got you negative 63 was showing you had no actual money to pay the taxes because you paid that money to your personal bank account and you went and spent it. Okay, so taxes are coming off profits. Core capital is about building reserves in your business. Okay, it's about building a sustainable level in your business so that you never have to really worry about, next month not having enough money to pay expenses that may be incurred. And using 2 months is a pretty good number as a safety net in your business. I hope that answers it.
Beautiful. Guys, if you have any other questions, feel free to ask. I'm sure Adam will be able to go back through and answer anything on the actual comments. Otherwise, we all appreciate you showing up for the Friday feature. It's been lovely to have you, Adam. Thank you for being here with us. Guys, we really hope that this has helped you kind of prepare yourself for understanding what it is to kind of prepare for a very strong end to the end for this year and then really crushing it in 2018. Guys, make sure to mark your calendars down. Next Thursday's brand new webinar, again, focusing on helping you prepare for the last 3 months of this year and really crushing it in 2018. Adam, it was great having you. Thank you so much for being here. And guys, we'll see you on the next one.
Thanks a lot.